we are joined by Erik Nielsen, Group Chief Economics Advisor from UniCredit Bank.
Hello.
Good afternoon, sir, and thank you very much for joining us here on TVP World on The Bottom Line.
Thanks for having me.
So to begin with, I wanted to ask about the investors' reaction. They started off with the sell-off of French assets and the euro in response to the French political crisis after the European parliamentary elections, and obviously President Macron's decision to call for snap parliamentary elections. Why is this unnerving investors?
First of all, investors and the financial community believes, and I think rightly so, that European integration is a good thing, that the EU provides a degree of backstop and community and international de facto check on balances, fiscal policies and others, as we know through the fiscal rules. So any move that raises the probability of a less cooperative Europe is something investors do not really like.
Okay, so if we see Marine Le Pen's national rally win and France enters a period of cohabitation, which is quite likely, how will this affect French and European economies?
I don't think markets will like it very much. And this has to do with both what I just mentioned about this sort of the fundamental idea of Europe and how countries fit into the Eurozone and the EU more generally, but particularly inside the Eurozone. But also specifically, if a party that advocates various protective measures on trade or more nationalist policies, that is, we know in economics that that's not good for growth. It may be good for politics, but it's not good for growth. And therefore, that's sort of the uncertainty and the direction of travel that financial markets do not like.
Okay, and still staying on France for a little bit, we know that France's credit rating has been downgraded recently. To what extent will this limit the country's fiscal maneuverability? Will the bond markets limit the country's ambitions?
I'm not so sure that the downgrade of France is a major issue, and the reason is that ratings of sovereign ratings matter when you get close to what's in the jargon is called junk, so sub-investment grade, and France is very far away from that, right? So there are no sort of categories in the investment community that says, if you are sort of moved a little bit, as we saw here at the very high end, at the very creditworthy part, that suddenly certain investors can't hold that security or those bonds anymore. So this is a more like a headline grabber for a day, and of course a little bit of a warning. But it is. But I don't think that in itself is particularly important. Certainly, I have not heard anybody since the announcement expressed concern about this specifically. We knew the numbers, we knew the outlook, and unfortunately, in my opinion, is that the credit rating agencies are usually behind financial markets in these aspects.
So just to round off this French theme, is it perhaps the case that this announcement and perhaps the reaction to the French markets is blown out of proportion a little bit? Will it die down in a week or so?
I think that's, first, yes, I agree with you that markets tend to overreact in the short term. That's very often usually the case. But I think so you could argue very well that, and very persuasively, that the first reaction here was a bit of a just sort of a knee-jerk reaction of uncertainty. But I think it depends very much on how the opinion polls pan out the next couple of weeks, and how the groupings on the right and the left sort of plays out, and thereby the probabilities of a cohabitation government in France or some sort of a coalition or whatever comes out. So this is what the market is going to look at, and it could definitely get worse in the markets. It's not been very serious so far. Let's just keep things in perspective. But it is something that markets are a little bit concerned about. And if it goes to watch, I would predict that if it goes to watch a Le Pen dominated government, I very much doubt the markets will like that.
Okay, and now moving on to the G7 summit, which begins tomorrow in Italy. As a reminder to our viewers, the G7 is an informal forum bringing together Italy, Canada, France, Germany, Japan, the UK and the US. The EU is also present in this setup in that it is represented by the presidents of the European Council and the European Commission. And unsurprisingly, the summit will discuss another package of sanctions on Russia. Now, my question to you is, how would you assess the impact of the sanctions imposed on Russia to date, and will this next potential batch bite more?
It's very difficult to say, but there's no doubt that the sanctions so far have bitten Russia. We have certainly seen, you have seen the capitalization of Gazprom, for example, and many other cases. So without a doubt, they have had a very measurable impact. The thing that I am not aware that the Western country, the G7, maybe fully appreciated 2 years ago when this all started, was the degree of support that Russia receives from other countries, particularly from China, but also trades via Turkey and some of the stans, so to speak, the Kazakhstan, the Uzbekistans in the south. And then, of course, the rogue states of Iran and North Korea, apparently, according to the press, I have no other information from that. But it's so the ability of Russia to have changed de facto to a war economy, I think it's fair to say, has been more successful than most in the G7 or the Western Europe or Europe would have thought possible, given the extent of these sanctions. So they have bitten for sure, but they have not really ended the effort for sure.
Okay, and one last question as we wrap up. How can Europe avoid losing out to China?
That's a very good question. But let me start by saying I don't like the term losing out to China. China has every right in the world to make economic policies to enhance the income level of their population and be part of the world and all the rest of it. I think we should welcome that for sure. And given the fact that it's over 1 billion people and they have not hit fully the middle income trap yet, so they have a lot of growth to deliver, that's all good. And given the fact that Europe, we are a smaller economy, even if you look at us together, and we are an aging population, we will lose relative influence in the world. That's inevitable, and I don't know that we should fight that per se. But I think also it is important for Europe to particularly now with America moving more protectionist, and particularly if Trump wins in November, that we don't get squeezed between the two big economies, the US and China. And we should stand up for the free trades and the standards and the values that we have. And I think that's what Europe does. But again, we come back to your very first question. If national politics moves France and other countries to a more nationalist tendency or outlook, then it becomes very difficult, right? And then I think and I fear that Europe will be squeezed like a pawn between the US and China going forward. And that's not good for Europe, to be sure. So getting together, being together, operating together, coordinating, I think is our best chance, to be honest with you.
Okay. Erik Nielsen, it's been great speaking to you. Thank you very much for your insight on the bottom line.